Ladies and gentlemen, good day and welcome to PCBL Limited Q1 FY25 conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjesh Jain from ICICI Securities. Please go ahead, sir.
Thanks, Aditya. Good afternoon, everyone. Thank you for joining on the PCBL Limited Q1 FY25 results conference call. We have PCBL management represented by Mr. Kaushik Roy, Managing Director, Mr. Raj Gupta, CFO, Mr. Sakesh Shah, Group Head, Investor Relations and ESG, Mr. Pankaj Kedia, Vice President, Investor Relations. I would like to invite Mr. Kaushik Roy to initiate the call with his opening remarks, post which we will have a Q&A session. Over to you, sir.
Thank you so much. A very good afternoon to each one of you and a very warm welcome as well. I will first quickly take you through the company update and then open it for question and answer. I'll give you some details on Q1 first, on the Q1 performance. So I'm happy to inform you that PCBL reported its best ever operational and financial performance during Q1 FY25. During this quarter, our consolidated sales volume from carbon black segment was highest ever at 1.54 lakh tons, which is up by about 25% on year-on-year basis, while consolidated revenue from operations increased by 59% to rupees 2144 crores, and this is due to better realization, sales volume, and consolidation of Aquapharm business. Consolidated EBITDA grew by around 72% year-on-year to 369 crores. PBT stood at rupees 164 crores, while PAT increased by 8% year-on-year to rupees 118 crores. Consolidated EBITDA per metric ton in carbon black segment stood at 20,861 as against an average of 20,018 per metric ton during FY24. During this quarter, PCBL Tamil Nadu achieved a sales volume of 28,228 tons. The state-of-the-art plant in Chennai has received approval from all major tire manufacturers in India and clocked a capacity utilization of 85% plus during the quarter. Of the total carbon black sales volume, domestic sales volume stood at 90,438 metric tons, while international sales volume stood at 63,480 tons. Export sales volume registered a strong growth on year-on-year basis of 56% in Q1 FY25. Now moving on to the segmental performance. Tire accounted for 87,945 tons. Performance chemical reported sales volume of 50,302 tons. And we also achieved specialty sales volume of 15,671 tons, which is again the highest ever in our history. And we continue to expand our product portfolio and customer base. We also achieved highest ever power generation and sales volume during the quarter. Power generation increased by 24% from 156 million units in Q1 FY24 to 194 million units during the quarter, with external sales volume of 116 million units as against 98 million units in Q1 FY24. PCBL's average realization stood at 4.16 per kilowatt hour, rupees 4.16 per kilowatt hour. Now coming to Aquapharm chemicals. Aquaform business is witnessing a steady improvement in performance. Post the completion of acquisition, we have been working on an integration process. Various efficiency improvement and cost optimization measures have been undertaken, and we expect these to yield positive results going forward. We are adding capacities for various high-margin products, and this will help us to improve the margin profile further. Currently, Aquaform has approximately 24% of global market share, excluding China, in phosphonates. We plan to further increase our share with additional capacities and value-added products in the segment. In oil and gas chemicals, Aquaform has less than 1% of global share, and we are working on a strategy to increase our customer base, presence in multiple new geographies, increasing capacity and supply chain capability. Green chelate, which is another exciting segment where we see rapid growth opportunity. With the push forward more sustainable and green chelates, there is growing trend for substitution of older chelating agents like HTPP in USA and Europe, China and India as well. We are therefore working on expanding the portfolio in green chelates. We are already making MGDA and GLDA liquid and are now working on MGDA granules. A number of new products are under development stage, and few are going through the approval process with large global MNC clients. In Q1 FY25, revenue of Aquaform stood at rupees 359 crore and operational EBITDA at rupees 55 crore. The quarterly sales volume was 24,402 tons. The capacity utilization witnessed a steep improvement and stood at around 75% during Q1 FY25. Your company is amid an aggressive capacity expansion program across different segments and is working on strengthening supply chain, product mix, and customer reach. The long-term prospects of all business segments look very positive, and we believe there would be adequate business potential to sustain the growth momentum. With the ban on import of carbon black from Russia into Europe, the European tire manufacturers are expected to increase sourcing from India going forward. PCBL is expecting significant growth in international sales volume in next few years. At PCBL, research and innovation are important drivers of both technical advancement and business expansion. In recent years, the company has intensified its commitment to research by making substantial investments in infrastructure, human capital, and streamlined processes. These investments have significantly bolstered PCBL's capabilities in new product development, customization, applications, and process efficiency. Recently, we received a patent for hybrid carbon black grade comprising graphene to improve performance of rubber compounds. This would lead to improvement of fuel efficiency, tire durability, and load-bearing capacity. Our current carbon black capacity stands at 770,000 tons annually. Currently, a specialty line of 20,000 tons and 90,000 tons of carbon black line is under implementation, and very soon we will start working on larger capacity. We are expediting pace of work on project size to fast-track commissioning. Post-commissioning of the above lines, above capacities, our CB capacity would reach 880,000 tons. This will include specialty capacity of 112,000 tons, while the power capacity would be 134 megawatt. This would help us to increase our global market share. The Aquaform capacity stood at 130,000 tons, and we have embarked on the capacity expansion program of 38,000 tons in next 6 to 8 months. The company is in multi-year growth momentum. The current annual revenue run rate has already crossed $1 billion mark and is expected to accelerate further ensuing quarters with the capacity ramp-up across different business segments. And with this, I conclude and open the floor for your questions, please. Thank you so much, ladies and gentlemen.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Aman Soni from Invest Analyst Advisor LLP. Please go ahead.
Hello. Am I audible?
Yes, sir.
Congrats for good set of numbers. Could you please provide the revenue growth guidance for FY25? Additionally, can you elaborate on whether the company expects to sustain its EBITDA margin, or if there are anticipated changes that could impact margin level moving forward?
Aman, I would give you a little long-term growth guidance. We are confident that the business, the carbon black business can deliver a roughly 11.5-12% CAGR growth. I'm talking in terms of volume over the next 4 to 5 years. And in terms of whether we are able to maintain our margin, there are a lot of initiatives that we have taken on yield improvement side, on product mix, side, and also with additional capacity coming up, the operating leverage will also play favorably for the company. We believe that our operating margins or our EBITDA per ton would keep on increasing between now and going forward. So next 5 years, I think we have a strong possibility of EBITDA going up by 4,500-5,000 rupees per ton. That's how we see.
Okay. Please outline the company's capital expenditure plans for the medium term.
The long-term capital expenditure, we need to add about roughly 400,000 tons of carbon black capacity, and we will also be kind of doubling aquafarm capacity across geographies. So we have two primary facilities. India, we have multiple facilities, but India I'm considering as one geography, and then US. Currently, they have about 130,000 tons. Next 6 to 8 months' time, 38,000 tons capacity is going to come up, and during next 4.5 years, we are going to add another 100,000 tons of capacity. So aquafarm capacity is also going to get double in next 5 years' time. Additionally, we also created a joint venture company in collaboration with an Australian technology company, and we are already in final stage of closing the agreement, and then we will immediately proceed with implementation of a pilot plant, and we expect the first full-fledged plant to be ready, up and running in next 1.5 to 2 years' time, and that is further going to add to the top line and bottom line at the consolidated level.
And my last question is, please detail the strategies the company is implementing to achieve the ambitious goal of increasing the business by 5x.
Aman, I did not get your question correct. What exactly is the question?
Please detail the strategies the company is implementing to achieve the ambitious goal of increasing the business by 5x.
Yeah, so if, Aman, you work out on these numbers, there's 11 to 12% volume growth in carbon black segment, that is doubling of capacity in aquafarm business, and then additionally this battery chemical company coming into picture. We will be, there is a very high, possibility of our getting a 5-fold, bottom line in the next 5 years.
Okay, sir. Thank you.
Thanks, Aman.
Thank you. Our next question is from the line of Aditya Ketan from SMIFS Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Just a couple of questions. Sir, first question is onto the carbon black. Sir, I think the last 2 quarters we have stated that since this sort of spreads in carbon black around 20.5 rupees per kilo is some sort at the higher end only. So, sir, like, are we continue building in such higher spreads, or we see in the near term that this could also come under pressure? And continuing on this part onto the aqua farm, this quarter we had reported around 22,000 tons as the EBITDA spread for aqua farm. So, sir, this is, you can say, it is in the mid-cycle or at the top end of the into the cycle part?
Aditya, to answer your first question, the change in our margins or the improvement in our margins on account of lot of efficiency measures that we took in last 7 to 10 years. And while still, if you go by segment, the specialty volume might just look about 10% of the total volume. But there are a lot of grades that we launched even in the tire portfolio, which carry very high margin, almost comparable with the specialty portfolio. But we still treat them as part of our tire portfolio. So like last 2-3 grades, if you track all the filings that we have done in recent past, those are all like composites or different grades which are not off-the-shelf grades, which provide superior quality to tires. And therefore, they carry very high margin as compared to the basic grades of, which gets into tires. So therefore, even the margins in the tire portfolio, that has improved. And that is further improving because the product mix itself is changing within tire also. Not only we believe that these margins are sustainable, we are confident that we can further increase these margins. So the same kind of movement which has happened in our margin in last 5 years, we are confident that we can deliver further improvement to the same extent in next 5 years. Coming to aqua farm business currently is going through a soft cycle. There is pressure on margin. Also, there is some competition, right? And earlier we were only working in some geographies with some clients. Now we are all expanding our customer reach and market both. The whole idea is to ensure higher capacity utilization, and also because we are ambitiously working on capacity expansion, so we are also investing in our supply chain capability in this business. So going forward, even in aqua farm, we are very confident of increasing volumes as well as the margin profile.
Got it. Sir, coming on to the aqua farm, so what sort of volumes we can expect for FY25, and what growth percent can we build in for the next 2 years in FY26 and 27?
Current year, I think we will be somewhere around 100,000 tons, maybe 110,000 tons. The total capacity remains 132,000 tons as of now. I mean, with current product mix, so maybe we will be somewhere around 110,000 tons. But capacity utilization will gradually increase towards third and fourth quarter. So we expect better volumes towards third and fourth quarter. Also, some of these lines that we are adding now in the new product segment, those will be operational towards third and fourth quarter. So that will give us some more volume.
So onto the volume growth, can we expect 15 to 20% in FY26 and 27?
Yes, our target is a little more ambitious. I think we can grow between 20 to 25% volume growth going forward. I mean, from FY26.
Got it. Sir, onto the capex part you had mentioned, but I missed that point. Sir, if you can highlight the capex we are doing for the next 2 years, and if we can break it up into the carbon black and into the aqua farm.
I'm giving you a next 5 years requirement. This 12% growth, for which we have very high visibility, would require roughly 400,000 tons of capacity addition in our conventional segment, which is carbon black, including the specialty. And aqua farm, we would be adding 38,000 in the current year and additional about 100,000 tons more in next 4 to 5 years.
So, sir, what would be the capex number?
Roughly, you can consider 60 to 65,000 rupees a ton for carbon black. So roughly 2,500 crores of capex in carbon black segment, And for this additional 38,000 tons that we are adding now, we have already spent about 165 crores, which is appearing in our CWIP as on 30th June. So the balance expenditure on this 38,000 tons will be just roughly about 50 odd crores, which will come up in the current year itself. And for the additional 100,000 tons, we will be spending roughly about 400 to 500 odd crores.
Got it. Sir,
Additionally, just I'd like to add, additionally for this battery chemical capacity which we are adding, that will involve two-phase expansion. So in the first phase, we are putting up 2,000 tons of capacity, which will involve roughly about 28 million tons. So roughly about 250 odd crores. And in 3 years' time, we expect the capacity to be fully utilized. So we will be doing another similar size plan. So on battery chemical side, we will be doing about 450 to 500 crores worth of capex. So between all three, if you add up, then we will be doing roughly about 3,300 crore kind of capex in next 5 years' time.
got it. Good. Sir, since our company would continue to remain in CapEx and annual would be somewhere around 800-900 crore, if I just divide by your number. So, sir, just want to know, onto the acquisition of Aquapharm, we had taken 3,800 crore as debt. So how you see that consolidated debt position will remain at this level, and annual interest cost of 420 crore would remain, or you expect some decline there also? Because we are in CapEx mode, and we would be using all the money, cash flow, to fund that CapEx. Any thought onto the debt part, how that will shape up?
Okay, I'll just give you some numbers, Aditya. Yes, we have CapEx and we have borrowings in our books, roughly 4,400 crore of gross borrowing. Net borrowing, sorry. 4,300 crore of net borrowing as of now. But if you just add up next 5 years cash flow, I'm starting from 2025. This year itself, we are going to do a cash flow, and we're going to generate about 1,000 odd crores before CapEx. And we add up next 5 years, that will add up to about roughly 10,000 crores.
Sorry to interrupt, sir. So your voice has been muffled, sir, while speaking. So I request you to come closer to the speaker and speak.
Yeah, sure.
In between your voice has been cut off.
Is it better now?
Yes, sir.
Okay. Yeah, so Aditya, I was mentioning that while we have borrowings in our books, roughly 4,300 crore, and we also have capex of another 3,400 crore lined up for next 5 years. If you calculate the cash flow that we are going to generate in next 5 years, that is going to add up to almost 10,000 crore, 9,800 something. Right? So that is not only sufficient to take care of our capex, but to also repay the entire debt. And yes, our interest cost is going to go down every passing year.
Okay. So you mentioned that 9,800 crore cash flow for the next 5 years.
Roughly 10,000 crore, yeah.
Okay. And sir, I think, sir, it would be around 1,000 crore annually, right? So we are expecting incremental 1,000 crore cash flow from 26.
It will not be linear. Every passing year, because of volume growth and margin expansion, our cash generation would keep increasing. So like current year will be roughly around 1,000 crore, and then of course it will keep increasing.
Okay, got it. Sir, just one last question, if I may. Sir, onto the ban of EU into Russia, sir, are we getting any incremental inquiries from the EU players, and this volume growth in exports market which we had clocked in this quarter, how much proportion would be towards the European market, and any further sort of inquiries, or are we getting it, and are we looking for a long-term tie-up from that market?
Yes, Aditya. Most of our overseas sales are now strategic to our strategic customer base. So we do sell something in spot market, but our endeavor is always to get into long-term arrangements with the customers who we consider strategic for business. Now, this Russian, the sanction on Russian carbon black industry, officially it has kicked off from 1st of July, but the real benefit we will start getting from maybe next, next 2-3 quarters, because there is some stocking up which happened in Europe. But even despite that, our volumes in Europe has been going up steadily. Last year, we did about 14% of our international volume I'm talking about 2023. We did about 14% of our volume from Europe. And this quarter, we have already reached about 21%, of international volume coming from European markets. So it is steadily growing. And we have made significant investment in our supply chain bandwidth. It is not only in Europe, but across geographies which we consider important from growth perspective. We are into aggressive capacity expansion phase, and therefore we need to constantly keep on adding customers and geographies. So that remains an area of focus for us.
And sir, the incremental contracts which you are doing in Europe, that is at a higher EBITDA per ton or at the same level which we have done in this quarter?
I would not say higher EBITDA per ton. The idea is to increase the strategic customer base, and eventually profitability will flow.
Okay, got it. Thank you, sir. Thank you.
Thank you, Aditya.
Thank you. Our next question is from the line of Sanjesh Jain. Please go ahead, sir.
Yeah, good afternoon, sir. Thanks for taking my question. First, on the Aquapharm part of the business, when we did the acquisition, they were doing 380, 370 crores of EBITDA. Right now, we are at a 55 crores of EBITDA. I know industry is going through a tough situation, but 55 crore looks way too small, and how do we plan to improve it?
Well, Sanjesh, when we acquired this company, we did not acquire it based on its current performance, but the potential that the business holds. Now, it is going through a soft cycle currently, and a lot of other chemical companies are also facing the same challenge. But we believe that it has bottomed out, and already there is a reflection in margin. It is improving. My own sense, Sanjesh, is that by fourth quarter of this year, we should be doing somewhere around 80 to 90 crore kind of a run rate, possibly 100 maybe, if things go as planned. So it's just a brief period during which, and there are a lot of initiatives that we are taking. We've also engaged McKinsey here to help us identify areas where we can focus more and improve efficiency. So those things are underway currently, and we are very confident that those initiatives will start yielding results soon.
Fair enough. Raj, you said that you are looking to increase the market share. We are already at 24%. The industry probably is growing at 4-5%. We are telling if we are doubling, say, in the capacity in next 4-5 years, we probably end up having a market share of 40-45%. Is that what we are aiming?
No, the market is also increasing by roughly about 5%.
Correct.
So therefore, with the incremental demand which is in the market. Additionally, global growth rate has also tapered down in last few years. So the current demand scenario in the industry is not reflective of its real potential. So yes, of course, we intend to increase our market share, but it will not be 47-48%. Possibly we will be somewhere around maybe 1/3 of the market share, global industry market share.
And whom will be gaining? Because if I look at the China today, anything which is based out of phosphorus, where China has a raw material advantage, they are only growing more aggressive. I can state you fluorochemistry on the phosphorus side, where they have been going very aggressively. And India doesn't have a phosphorus advantage. Now, how do we plan to beat Chinese and get this market share up from 24 to 33? So one of the reasons why market today is slum is also because of aggressive Chinese.
There are few things that we are considering. One, of course, there's a natural advantage over China when we sell in Western market. There is anti-dumping duty on Chinese products. So, we get benefited. So we get some advantage there. But having said that, couple of things that we are doing is we are looking at some kind of backward integration, right, on the yellow phosphorus side. The yellow phosphorus is a mineral, right? It is mined. But then for it to be used in our processes, it needs to be converted into something else and which is very energy intensive. So we are planning to set up some, phosphorus processing facility in Middle East, which will save us some cost. Additionally, our procurement team is also looking at different geographies for sourcing. Currently, most of it is coming from Kazakhstan, which is logistically not very efficient. But we are also exploring possibilities of sourcing it from other geographies. And third is we are also looking at replacing part of this raw material chemicals that we are currently using with some other chemicals which are not as difficult to procure in India. So those are of course a little mid to long-term kind of initiatives, but those are the things which we plan to repair going forward.
Got it. This also...
So the natural advantage that you mentioned that China has, see, the similar kind of advantage till one point in time China also had in carbon black industry. But gradually we improved our efficiencies, our manufacturing efficiency, operational efficiency, and today we are far better placed than where we were maybe 6-7 years back. And now that once we have crossed that path, for us to implement a similar kind of initiative model in aquafarm is not going to take as much time.
Got it. But the phosphorus India has been struggling for a while, even in the fertilizer segment.
Hello, Sanjay sir. Your voice is not audible, sir. I request you to use your handset while speaking, sir.
Yeah. I was telling Raj that phosphorus India has been struggling for a while now. The fertilizer, which is a large consumption in terms of the volume, they also had their own fair share. But I got your point that we are looking at backward integration and to de-risk this. That's a welcome point.
And also, you know what, Sanjay, while we talk so much about phosphorus, all that we use is just about 10,000 tons of phosphorus in the process.
Hello, sorry to interrupt, sir. From the management line, your voice has been cutting off, sir.
You are clear now.
Yes, sir. Yes.
Okay. So, Sanjay, I was mentioning that while we talk a lot about availability or non-availability of yellow phosphorus in India and therefore the cost impact, but yellow phosphorus, all that we buy, annually is just about 10,000 tons. So it is just one of the many chemicals on raw material side that we purchase. It is not the sole raw material. It just accounts for maybe 7-8% of our total raw material that we consume.
Oh, only 7-8% of the raw material.
Yeah.
Clear. Now shifting back to the carbon black, Raj, if I look at the global commentary from your peers, they have downgraded the EBITDA expectation for this year. Just wanted to understand how is this Russia ban thing working? Because globally, clearly, it looks like the expectation was high, but it hasn't completely flown through in terms of the benefits.
Okay. So the global peers, when you look at their commentary, because they have operations in multi-country, they have manufacturing facilities in multiple geographies. So therefore, when they give guidance based on all these countries' local demand-supply condition also. So like Capet and Orion, if they have facilities in China, Chinese carbon black industry is not doing well, and therefore it will reflect on their blended margin. So that may not be reflective of the industry margin possibility or margin profile. The way we look at it, Sanjay, a large level of consolidation has already happened in China. Additionally, their cost structure has changed. It has gone up significantly, both on raw material side and also on operating cost side. Their labor cost has gone up, their environment management cost has gone up, right? And the raw material cost, of course, has gone up significantly for them. So today we are very competitive in global markets, and therefore, while we have continue to increase our volumes in international markets, our margin profile has also kept on increasing. It has not gone down. So that's one reflection of our ability to compete with all the global peers in global markets. Second, on top of this, now with ban on Russian carbon black, it is going to create further deficit of material in the market. Between Russia and China, they used to control 80% of global trade. Now with China, having pressure on the cost side and Russia going out of business, at least in the European market or Western market, somewhere it is going to create a larger possibility for rest of the manufacturers in rest of the world. And global industry was never in so much surplus supply. Even before China consolidation, there were regional imbalances. Some countries had more, some countries had less capacity. But industry was never in so much surplus capacity, which can absorb this consolidation in China and Russia. We believe that industry is going to remain in short supply for at least next 5 to 7 years time. And 2 years back also, when we were asked this question that so much capacity is coming in India, how we plan to utilize our capacity that we are adding this greenfield. And see, it is not even 1 year, and we are already at full capacity utilization. And we strongly believe that this condition is going to continue for next 5 to 7 years time. And therefore, the confidence that we can grow at 12% volume growth. And 12% also, we are saying that addition of capacity will take time, and possibly even if there is opportunity, we can't grow beyond that.
Fair enough. That's quite elaborate and clear, Raj. Just one question, this expedition of capex which we have done in the Chennai facility of 90,000 metric ton, when are we expecting that to come online?
See, it will come in 2 phases. 30,000 tons we expect in third quarter itself.
Okay.
And balance 60,000 tons, where we also have to do downstream. That is going to take some time, maybe about 12 months time, 12 months from now. So by third quarter of next year, second quarter or third quarter of next year, next financial year, it should be up and running.
So till then we will be constrained by the capacity, right? We have hit full utilization in Chennai and all the other facility in which we were running at an optimal utilization.
Mhm.
Until this capacity come, we will be short of supply to the growth, right?
Not really. See, the way the capacities are stacked up, already we can go up to roughly around 625-30,000 tons of production based on our existing capacity.
Okay.
Then we are adding 110,000 tons capacity in next roughly 12 months time, including the 20,000 tons specialty capacity. Now this 110,000 ton capacity is roughly going to give us about 85 to 90,000 tons capacity. So it takes us to roughly about 700, 510,000 tons kind of capacity. And it is not that we are going to sit idle between now and next 1 year. We are going to do more downfield. Tamil Nadu still gives us some scope. We acquired a small piece of land there. Additionally, we are also looking at acquiring more land. There is one large piece of land available, but it is not exactly in Sipcot area. We are just trying to, see whether we can negotiate with Sipcot and bring it under the industrial area so that we get all the facilities of Sipcot. If that happens, then the larger facility that we are planning, to build up next, we don't need to do it greenfield. So, and that will save time also. So, and when we are talking about 12% volume growth, last year we did 530,000 tons. If you apply another 12,000 tons to that, we will be doing about 600 odd thousand tons this year. And next year, we will be doing about 670-80,000. This 12% I'm talking about if I keep on adding. So for FY25-26, we have adequate capacity, and by 27, we will have more capacity coming up, which will take care of the growth. So and when I'm saying we will maybe constrained by capacity, we are saying that while we can add 12%, on a year-on-year basis, but growing beyond that possibly will become a little challenge because, addition of capacity in such short periods, bigger capacity addition in shorter period may be difficult.
Got it. That's pretty much clear, Raj. Thanks for answering all my questions, and best of luck for the coming quarters.
Thank you, Sanjesh.
Thank you, sir.
Thank you. Our next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity and many congratulations on good results. Sir, my question was that our target is to reach 2,500 crores PAT in the next 5 years. So if we take carbon black 12% volume CAGR and EBITDA per ton of 22 per kg, 22,000 per ton. So I think we can get
Sorry
1,100
to
crores
interrupt.
PAT.
Ma'am, please be
Yeah.
loud, little loud. Your voice is not audible.
Okay. Okay. Yeah. So to reach the target of 2,500 crores PAT, if we do a quick back calculation, then in carbon black, as per your guidance of 12% volume CAGR for the next 5 years and EBITDA of 22 per kg, we can do around 1,000 to 1,100 crores PAT. And in aqua farm, if we double the capacities and run at full utilization in the next 5 years, we could do another 500 crores. So can you, sir, please explain me where the gap of 900 crores is coming from?
Well, Radha, first of all, we strongly believe that we can increase our margin beyond that. So I was also talking about it a while back, that there's a possibility of improvement in our EBITDA to the tune of 4,500-5,000 rupees per ton, which takes us to roughly about 25,000, 26,000. Even if we consider 25,000 rupees per ton on a 12% CAGR volume growth, which kind of takes us to roughly 940,000 tons in FY29. If you apply it on that, we do a EBITDA of roughly 2,300 crore. Aqua farm, already we believe that this year with the current capacity, and which is not fully utilized, we are going to do roughly about 300 crore. And the current capacity can give us EBITDA up to roughly about 450 to 500 crore. Because in FY23 the company did 400 crore plus EBITDA, right, with lower capacity. So we can go up to 500 crore from the current capacity itself, and when we are doubling capacity, actually it takes us to close to 1,000 crore. But even if we consider 70% capacity utilization of aqua farm by 2029 on the extended capacity, we still do about 700 crore of EBITDA. And then this battery chemical, which is a very high margin business, we believe that it can throw around 1,000 to 1,200 crore kind of EBITDA numbers by 2029. Now, if you add the 3 year, it will take you to roughly around 4,300 crore of EBITDA. Our debt will almost be paid off, with the kind of cash that we are generating, and we will just have depreciation of about 500 crore. So even if you consider the interest of 200 crore, right, then also, between depreciation and interest, it will be just roughly about 700 crore. You deduct it from EBITDA of 4,300 crore, you are still at 3,600 crore. You apply whatever tax rate, you are still beyond 2,500 crore. That's how we calculate it.
Okay, sir. And this capex of 3,300 crores you mentioned, so that capex is 3,300 crores is what we would require to achieve 2,500 crores or
yes.
anything higher? Okay.
No, yes. This is adequate for us to achieve those targeted numbers by 29.
And so this 1,200 crores EBITDA for the JV, that is for our share of JV or the whole?
No, this is whole.
Okay. And so in aqua farm, you said that in 2023 they did higher profitability, but I believe that there was some supply chain disruption, so that's why the profitability was higher, and now it is more kind of normalizing. So
now is also not the normal scenario. 22 may have been an exception, but 23 margins had already moderated. And now what we are seeing is industry at its bottom, like most of the chemicals. So this is also not normal.
Okay, the 2020.
Like I said, the two things. One, the capacity utilization is still very low. We are currently at about 75% capacity utilization. Second, so all the efficiency measures that we are taking on the cost side and operational efficiency improvement side, those are going to take our bottom line higher. So by fourth quarter of this year, our performance would increase, which will almost give us a run rate of about 360 to 380 odd crore annualized number, EBITDA level.
Okay, sir. And second question was on the performance chemical side. So 2 years back, this used to be 20% of our carbon black volume. Now we are at all-time high levels, 33% of carbon black volume. So what is leading to this high growth in this segment, and do you expect the momentum to sustain?
No, the way we look at it, though performance segment carries little higher margin, but the offtake is not uniform across quarters and across years. So we, keep open eye. We keep on looking at, how the markets are behaving, which segment the demand and pricing and margins are attractive, and we then keep changing our allocation. So this will fluctuate between 25 to 35%, depending on industry dynamics. But our focus is more on to, increase capacity, increase our market presence, and improve our margins through our own efficiency.
So what is leading to this volatility in performance chemicals business? And also, secondly,
the end user industries are different, Radha. So sometimes when those end user industries perform well, the uptake is better in that sector.
That would be construction and infrastructure.
Construction, infrastructure, automotive industry, all three. And also paint, chemicals. It's a wide universe, very wide universe.
So here, majority of the sales are on spot basis. So
no, it is not. No. It is not majority on spot basis. While some of the sales is of course spot basis, but the customers are mostly our regular customers. So the sales is in form of, mostly repetitive nature.
The regular customers means the tire customers or?
No, not tire. I am talking about performance segment customers. So the customers universe is more or less, of course, we are adding more customers every passing year. But then customers are repetitive customers. Only thing is that when their demand, goes up, then we tend to supply, the offtake in this segment is more.
So how is the domestic export mix in performance chemicals?
It is more in international markets. So we are doing roughly about 35% domestically and 65% international.
Okay. And currently, which regions you are seeing increased demand?
Radha, you have to ask question again. Your voice is little faint.
So in exports market, which regions you are seeing the increased demand?
We were always very strong in Asia Pacific. The last few years, we have been trying to build roads in Western Europe, North America, and while the markets are growing across, the customers are growing across markets, but we are also putting a little more focus on Western Europe now.
Okay, sir. Thanks and all the best.
Thank you, Radha.
Thank you. Ladies and gentlemen, please limit your question to one per participant. Should have a follow-up question, we request you to rejoin the queue. Our next question is from the line of Harsh from Kuber Investments. Please go ahead.
Thank you. Am I audible?
Yes, sir.
Yes, Harsh.
Okay. Thank you. Thank you for the opportunity. Raj, you mentioned that there is an capacity expansion for Aquafarm that is underway. But in the last call, we mentioned that there's some capacity that is going to come up in the US. So this 38K that you mentioned, is it the one that is going to come in the US?
No, this 38 is entirely India. US, we will have to add capacity because we are already operating at almost full capacity. But the line specification or the product specification is still being worked upon. So maybe we will, start sharing further details about those in a quarter's time.
Got it. So this 38K is something that you're mentioning is going to come up in the next 6 to 8 months.
Yes, by February or March latest, we should have all this entire 38,000 tons of consumption.
Sure. And also we spoke about the pressure on the Aquapharm margins at this point of time. Is this something that we had estimated during due diligence, or is this has come as a surprise to us?
No, this has not come as a surprise to us because the acquisition got completed in January, 31st January, and we already had, last 5 months. I mean, first half was already a little subdued. I'm talking about the period between April and September, and then October to January was even little softer. So we had those numbers coming in, and we also had the commentary from the industry peers. So we knew that it is going to go through a soft patch. But then, considering the product portfolio, the customers to which they are catering, Aquapharm is catering to, and the markets where they are present, we thought to go ahead with this transaction.
Fair enough. And my final question is regarding green chelates. We've heard a lot of bullish commentary from the management regarding green chelates, right? But it's currently only 1% of the total sales. Do we need to do some market development activities to grow this segment, or is there a shift that is already underway and we're going to ride this trend?
I am handing it over to our MD, Mr. Kaushik Roy. He'll answer your question.
Sure. Thank you. Thank you.
Okay. there are 4 major segments. One is phosphonate, where we are 24%. And then we have got three major segments where we are around 1 to 2%. Green chelate is one of them. One is green chelate, one is polymer, and one is chemical for oil and gas. And on all three of them are, profitability-wise, all three of them are pretty healthy. Additionally, for green chelate, it is a biodegradable product and therefore a sustainable product, which is the need of the hour for the globe in a way, you can say. So all these 3 areas, we feel, since we are just about 1 or 2% of the global share, we have a lot of headroom to grow. In addition to phosphonate, where we are a strong player, we'll keep on maintaining the strength there. But additionally, we'll grow a lot in these 3 areas particularly. And you are absolutely right. We need to do a lot of marketing activities, lot of market development activities, lot of customer development activities, product development activities also, and geographical expansion in terms of having right kind of logistics support everywhere. So all this will act as building blocks. It is somewhat like, PCBL, as you know, earlier it was primarily India-focused organization. And today almost 35 to 40% goes out of India. And we build all these supply chain blocks over a period of time across the globe for PCBL, including our R&D center, including supply chain warehouses, logistics partner tying up, having our own offices in different countries. Similar initiative will also be taken for Aquapharm.
Got it. Thank you. Thank you for that elaborate answer. And the final question is that...
Several participants are waiting for their
No
turn.
problem.
Okay,
No problem. Thank you.
We can take it offline, okay?
Sure. Thank you.
Sure.
Thank you. Our next question is from the line of Venkatesh from Logic Tree Consultancy Private Limited. Please go ahead, sir.
Hi, sir. Good afternoon. I just have one question on which is more of an optionality. So when I was reading about the literature and your own commentary about Aquapharm and everything else, apart from what you have highlighted in terms of volume growth, is there some sort of an optionality that we are probably not still, although you have been very optimistic on the future growth prospects, when you could talk about the Australian JV or the potential of Aquapharm into water treatment, nano-rate tubes that you talked about, is there something where that can come as a very pleasant surprise, which can probably outdo your optimism? Because these are all sectors which can have huge growth when you get it on the cycle right. So can you expound a little bit on that?
Yeah, Mr. Venkatesh. So if you notice that the numbers that we are sharing, even for, especially for Aquapharm and this battery venture, which is Nanowave, we have considered the same margin multiplied by the increased volume. But historically, their margins have been far better. We are not considering those margins because then that will be a little optimistic. But chemical industry goes through cycle, we all know. And in 2-3 years' time, if the cycle improves, then we can even enjoy better margins than what currently we are factoring in our calculation. On the battery chemical side, currently the material which we are planning to produce that gets sold at about $300 a kg. For our calculation, we are considering $100 a kg. Now, that's a conservative estimate of the selling price, and of course, the EBITDA is a percentage of the realization. So those are all the positive upside which may be there, but we are currently taking a conservative estimate of what the margin profile would be.
Okay. And just going on Aquaform, considering that they are in US and Europe, and that's not a market that we have never been, would there be cross-selling opportunities, one? And considering that the capex in Europe and US from the majors out there is quite limited, would there be chances for more export opportunities of pouring into the US market? Related question is, Aquaform is into water treatment. That's a big area, big size opportunity. Do you have some sort of an opportunity size that you can talk about for the Aquaform's water treatment chemicals?
I'll answer the first two questions and then hand over to Mr. Roy to talk about the opportunity or the possibility in water treatment segment. In terms of synergy, based on their supply chain network, yes, they are present in markets where we historically had low presence. So almost 75-80% of their volumes come from North America and Western Europe. And we hardly had any presence in these markets. We are trying to build inroads, but that is a slow process. But now that we are, through this acquisition, we have got access to this supply chain network. This is going to speed up things for us. And these are the markets which are not very price sensitive, so the margin profile also, once we build inroads, and the margin profile also improves in these markets. So we are going to get advantage of this. Additionally, if you look at PCBL, all of our manufacturing facilities are in India. We never had any overseas manufacturing experience. We didn't know. And therefore, also there was some kind of skepticism about our building up some capacity outside. Now we get this company which already has a manufacturing facility in US. And the people, our team is managing it, running it so many years. So that's a new capability which is being served to us on plate. So tomorrow, if we want to build up some manufacturing facility in other parts of the world, then that capability will be useful. Now, regarding the possibility in water treatment segment, would you repeat your question once again? I'll hand it over to Mr. Roy to answer.
Would you like me to repeat the question?
Can I have your question on water treatment, please? What exactly was the question?
Yeah, my question is, I think it's such a large area and it's very important, water as a theme. So I'm trying to look at what is the size of the opportunity that you're looking at and where will be the applications be. For example, if Saudi Arabia is going to get into in a big way on capex on water treatment, or whether it is in India, have you evaluated geographies and where this can be used in terms of the overall size of the opportunity size for the water treatment chemical?
No, you are absolutely right. Water treatment, the whole area is actually huge. And I think, it is hardly explored yet. It is very limited so far, but as we go along, it will be more and more, there will be a lot of focus more and more in this area. In fact, in our R&D, we are taking a few more initiatives also in terms of possibility of new products in this area. So it is not just about different countries and different locations and applications from water treatment point of view, but also from product point of view. So we are looking at that as well. We are yet to quantify that. Give us some more time. Possibly we'll come back with a better understanding in terms of numbers. What is the size of the opportunity? But you are right. We feel there's a huge amount of opportunity.
Okay, sir. That's good. Thank you very much, and I wish you the best.
And just generally for all of you, we are only discussing few things here like carbon black and battery and Aquaform. But the organization actually is looking at few other things which we are not sharing at this point of time because it's maybe a little too early. Very exciting initiatives from other areas and maybe even breakthrough areas breakthrough opportunities. And I was hearing the question a little while back that, can it go beyond this? I'm keeping my fingers crossed, but if it goes, it will go multifold. It will go really multifold. But those initiatives are very, very big. Very, very big. But little too early, so therefore I'm not sharing any more details, but 3-4 more areas we are working on. Hopefully we'll be successful and we'll come back to you very soon. Thank you.
Very good. Wish you the best. More power to you.
Thanks.
Thank you. Ladies and gentlemen, that was the last question for the day. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.